All right, Prasanth Prabhakaran is ready right now to chat with us. Prashant, afternoon. Prashant, how did you analyze the last few days? And if you could just give feedback of the data point which you read. Now, everybody was making a point that, there is hardly any direct correlation between the geopolitical issue and Indian markets and economy, but indirect one. What it does to crude. Crude may have come off highs, but has not fallen a whole lot. So think, what are the elements right now which you are monitoring important for Indian markets?
So clearly, the fact remains that the Ukraine issue that has been there has impacted equities across the world. Now, why is there a fear? What is happening in Ukraine is simple. Heated geopolitics actually raises fears of disruption in world trade. And on top of that, you have had a crude price increase, as you have rightly said. And the world cannot afford it at this point of time because most of the countries are facing a huge fiscal deficit due to support given to their economies during the COVID period of time. You know that India itself is way above what we had budgeted in March 2020. Now, when you end up looking at this, obviously when crude has shown volatility, it has touched a peak, it has come down. It has an issue that is related to the fact that it can further increase fiscal deficits at any point of time. But what also happens during this period of time, Ajay, is that whenever there is an increase in price of crude, usually when you correlate it directly with the GDP that is there, you'll realize that the percentage, like for India, the highest that it has gone to is around 7%. And traditionally it remains in the range of 5 to 6%. And today it is at around 2.5–3%. So even if it increases, the demand portion of it contracts itself. So it directly doesn't affect, but you have a sentimental effect that is there. You reduce or cut costs at any point of time, and that is why there is usually an impact that happens which is immediate. But needless to say, long term, when you end up looking at it, all this doesn't make a difference. Only thing that matters is that your fundamentals of the companies that you have in your portfolio ends up doing well. So the long-term structure of the Indian markets is intact. We remain bullish as far as 2022 is concerned and beyond. Focus should be on quality stocks, needless to say.
Sure, let's get the focus on quality stocks then. Prashant, earnings season is just winding up. What are the early signs your research team has told you about? How long can this margin pressure issue linger on? Which quarter do you see the margins stabilize and again rebound? Do you think commodity prices will come down in the next few quarters?
So, you have got to understand that nearly around 65 to 70% of commodity price increase, most of the players have managed to pass it on to the clients. So, in case there has been an increase in commodity prices, you have made sure that it doesn't affect your balance sheet to a large extent. Whatever has been accepted by your clients has been passed on. And that is why, even though there has been a margin pressure, most of the earnings that you have seen in the last quarter gone by are more or less in line with what we had expected at any given point of time. Maybe the top line growth that we had expected had been slightly contracted. Apart from that, the growth that has been there in the bottom lines is more or less what we had expected. And that remains the crux of the matter. You have got to understand that Nifty from the lows of around 7,500 has risen to practically 18,000 levels. And it has been consolidating since around October 2021. The rise that you had expected has already happened in the markets. It will cool down till the valuations and fundamentals catch up with each other. So I don't think so we should be too perturbed about what has happened as far as commodity price increase. You have got to understand that even during the 2003-2008 phase of Nifty, commodity prices were continuously peaking up, but markets ended up giving up new highs at any point of time. It only collapsed when there was a structural breakdown of the economy which happened because of the crisis that happened in that period of time.
A good reminder, I must say, because first of all, you have to also see that a lot of incremental investors, traders which have come in the last 2-3 years do not have a memory of 2003-2008. So it's a good reminder coming in that was also a period of economic expansion. Commodity prices went up, rates hike happened. All of that happened in combination, and there was a bull run which played out. And essentially what you're saying that it may be similar to that, not completely the same. What about
So
earnings
there's a
growth?
difference.
Yeah, sure.
Sorry,
Please
I'm
add
just
that.
interrupting. There's a
No, no,
difference
please
that I
go
would
ahead.
like to point out, that when the pullout of money happened during the 2008 phase, the markets collapsed because there was no domestic pool of money which could have supported the markets at that given point of time. You have got to understand that we have lost $6 billion in 2022 itself, the calendar year 2022. But markets haven't collapsed too much. It is still reasonable. It's still, I'm not saying that you won't have a correction, because there are factors that have playing out which could unravel itself, but it will be short term. Long term, as long as the government support continues, and it has clearly shown signs in the budget also that they will continue to giving support to the economy. RBI has also ended up making sure that there has been no tinkering of rates that is there. Your fundamentals will continue doing well, and that is what we should be concerned about.
True. I mean, the third
Remain
front
invested
of
and be
flows which
very
has,
confident about the fact that we have $2 billion of SIP money coming month on month into the
yeah,
markets. It's
yes,
not a
I
small
hope
amount any longer.
I hope a bulk of that is sticky money, because when markets turn jittery, volatile, some of that gets scared. But it appears that it is sticky this time around for sure. That's a big hope, and that's a big
That's
support coming in. Now, what are the areas of the market you like in particular? Because you're someone who also looks at deeper. Uh, the quality of earnings are much stronger in areas where you would recommend, or you are researching themes on very closely from your time from your team.
yeah. So Ajay, from our perspective, from the research desk perspective, it remains focused on the capex expenditure that is happening from the government end. You end up looking at infra and it related allied sectors that are there. And you look at real estate, that is another area that is starting to pick up, and allied industries along with that will keep on doing well. Home improvement, your pipes, everything related to real estate in the affordable space looks interesting. But the difference that is there in this crack that has happened from the 18,500 levels to the present levels, and some more that might be there in the pain that might be there, is that it might just be the right time to end up looking at decent mid caps with low debt to equity ratios on their books, very less debt on their books, and end up building a position slowly and steadily into these mid caps out. Sector agnostic, look at good quality stocks which are well run as far as management are concerned, and with debt which are reasonably low, because the reversal in interest rate cycle is bound to happen very quickly. You might have a US Fed increase that will happen hopefully in March 2022 itself. But the fact remains that it might be gradual that is there. So look at quality mid caps. It might just be the right time to end up building up on this, because this will give you your large alpha that will be there in your portfolio at any given point of time.
Prashant, are you looking, or have you worked on any of the new themes which are starting off? There's a hydrogen policy which is coming up to be taken up by the government today, or any other themes which you are working more deeply, which market may be ignoring right now?
Not at this point of time. As the market, I've been in the market for the last 3 decades, and I've burnt my hands in energy every point of time that it has happened. It's good that it's green energy. Unfortunately, at any point of time, we'll have a correction which both wind and solar has seen as far as rates are concerned. So I will wait to see, and this clearly can be a very small portion of my portfolio. The advantage and the way I'll end up looking at it is that even though there has been a large correction in new generation IPOs that has come in, it might be an area that for a long run you need to be invested in, and it will be a sizable part of your portfolio, say 5 years down the line, when valuation will be a lot more centric towards the investor who is putting in money. But over the long term, because of the digital portion of their business, it will give a large value for the investors at any given point of time. So it's time that you end up looking at reasonable valuations in the new generation businesses that have got listed in the last 2 to 3 quarters that are there.
Fair point. That's an interesting point. Prashant, what about UP elections? Do you follow elections in the medium
We
term?
follow
Definitely
everything
something.
macro we follow. Everything
Yeah.
macro we follow, Ajay.
Correct.
As I say, the way Ukraine elections, Ukraine issues have gone ahead, you will have elections which will show short-term volatility, irrespective of which side it moves at any given point of time. only thing that will affect is your earnings that are going to be there for your portfolio. These are events which are fabulous from a volatility perspective to end up getting traders better entry points at any given point of time. From a long-term investor perspective, the only thing that matters is your EPS and your PE that you have ended up investing in.
Prashant, have valuations got corrected enough in various pockets, mid cap, large cap, small cap, or do you see areas of fraud still, which you expect them to get corrected over the couple of months?
We will continue to do well as an economy, Ajay. So you will end up getting valuation because there is liquidity which is consistently keeping on coming into India. And now with the pullout of money that has happened, you have got to understand that once things stabilize globally, you have outbeaten every emerging market as an enterprise out. So your correction, your 7,500 to an 18,500 jump that has happened is not small under any the circumstances for any investor that is there in the market. There would be profit taking, there will be volatility which will be large. But portfolios to be built, as I said, in the mid caps, you might end up getting good names to end up looking at. Banking is another sector where debt to equity for most of your Nifty based companies and large mid caps are at historical lows that are there. Their credit cycle is starting off. Most of your promoters are starting to look at private capex to be built. The PLI schemes that the government has introduced has ended up ensuring that there is interest that is coming because there are tax holidays for them. So a lot of things that work beneficial in case you build a long-term portfolio. You'll end up seeing returns also which are way above the 14-15% mark traditionally that Nifty gives over decades that are there.
Right. All right, Prashant, we'll let you go on that one. Always enjoy chatting up with you. One of these days, as things are getting normalized, we should catch up for a coffee as well, face to face.
Right. Thank you, Ajay. Pleasure always.
Right. All right, so that was Prasanth Prabhakaran of Yes Securities. Time for a short break, but don't go anywhere. On the other side of the break, we'll put the spotlight on the hydrogen policy which the government is likely to take up this afternoon. We'll have our colleagues from the reporting side, from the research side, to add value on what to expect, what exactly is it all about, and the stocks to watch out for. Don't go anywhere.